Everybody, welcome to my Intermediate Accounting 17th edition video solution walkthrough for Kiso, Weingart, and Warfield. This is exercise 1916. This textbook is by the authors Don Kiso, Jerry Weingart, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, before we say thank you, Wiley, let's go ahead and have some fun. So Katie Holmes or Kate Holmes Company, first year of operations, the company reports pre-tax financial income of $250. Their tax rate is 45% for 2020 and 20% for all later years. Holmes expects to have taxable income in each of the next 5 years. The effects on future tax returns of temporary differences existing are summarized as follows. So I'm not going to compute the schedule below. Rather, let's just get to it. So right over here, compute taxable income. So my pre-tax income is $250,000. Now, when it comes to this over here, let's go ahead and take a look. So installment sales, I did not record them for financial statement purposes, or how would I put this? I didn't record them, but I will have to record them later, or it's basically going to revert. Actually, it's not the best way to say it, but installment sales, what this means is that this $32,000 is going to become taxable in future periods. So I'm not recognizing it for tax purposes now. Actually, I'm recognizing it for income statement, but I'm not recognizing it for tax purposes, something like that. So less installment sales. This is going to be a temporary difference of $96,000. Over here, I have depreciation expense. This over here is going to be $30,000, right? I'm taking the deduction. It's going to be taxable in future periods. Unearned rent. Well, what is this? I recorded it as a deposit, but the tax return says "and." So this is going to be an add back. So unearned rent. These are all temporary differences. This is going to be $100,000. So my taxable income for 2020 is going to be $224,000. So my tax rate for 2020 is going to be at 45%. So my income taxes payable is going to be at $100,800. So my taxable income is $224, and now I need to do my journal entry. I'm going to debit income tax expense current for $100,800, and I'm going to credit income taxes payable for $100,800. Now I've got to deal with my deferrals. Okay, I've got a few of them going on here, but what I'm going to go ahead and do is let's look at each one of them separately. So for my installment sales of $96,000, this is going to be at a tax rate of 20%. Why is it at 20%? Because it tells us right up here, basically says basically for all later years. So I can lump them together and multiply it by 20%. So right over here, I've got $19,200 for the depreciation of $30,000. I'm going to do the same thing. I'm going to use that same 20%, or $6,000. So my deferred tax liability is going to be $19,200 plus the $6,000, or $25,200. Now, that's a deferred tax liability. I'm taking the deduction now, but I'm going to have to pay for it later. Sounds like candy, now and later. I didn't do that. That's my dad joke for the night. So my unearned rent, right? Because I'm paying tax on it now, it's going to be an asset later on. So this is going to be 100,000 times 20% or $20,000. So I'm going to have a deferred tax asset of 20,000 over here. What I'm then going to do is I got to say, all right, what do I need to do to balance this? This is going to be income tax expense deferred, which is my balancing account. Goes along with income tax expense current. This is going to be 5,200. Okay. Just give me one moment. So again, your textbook is going to show income tax expense current on the journal entry. They're combining the two. I like to break it apart, just makes it a little bit easier for me. So this is going to be on 12/31/20. And so we've done the taxable income, we've prepared the journal entry, and now we're all completed. I didn't do this schedule down over here. What I would do is I would show 9,600. Well, let's just go ahead and do it for fun. Okay, so future taxable, deductible amounts. Wow, deductible. Good job, Tchaikovsky. Okay, and we'll say that the temporary difference, installment, sales, depreciation, unearned rent. Okay, and this is 96,000, 30,000, 100,000. Wow. Okay, so this is totaling up to a net of 26. Okay, so my rate is at 0.2. So at 12/31/20, my deferred tax asset, my liability, whoa. Okay, so this over here is going to be 96,000 times 0.2, 6,000, 25,2. This is going to be 100,000 times 0.2 or 20,000. Wow, we just did the chart too. Yay. It's exciting. Okay, in any event, was I being recorded for that? Thank you, Wiley, for allowing me to use your problems and make fun of myself. I look forward to seeing you on the next video. Please don't forget to like and subscribe. If you would like to see other solutions, please feel free to ask for them in the comments. I'll see you soon.